Today I want to talk about the Dow Jones, and I basically want to look at the charts overall and see what's happening, and to kind of break it down to see what might be happening in the next week. So we're going to look at it, and see what we can pick up in the charts. I'm going to plug in the formula that I've been using for the last couple videos. It seems to work really well, but overall I just want to give you guys a general outlook of what we might be in store for for the next week. Okay, so for those that want to trade the Dow Jones, you're going to have to open up a Forex account. And when you want to look at it, you want to go to the US30, which is the Dow Jones, and that will give you the chart. So basically, set it up. There's 3 indicators that I use. The first one you want is to get the L&L trend system. So basically go to indicators and you go to L&L. It's by L&L Capital, and basically the settings, you need everything. You can check everything off. Check everything off by default. You only need show trend line and make your colors bright, and show HDF trend line and make your colors bright. You uncheck everything else. And the next thing you want to get is the linear regression candles. So you want to go to linear regression candles. And once you got them, just hide your regular candles. And then you need RSI. So once you have that, you'll have this setup. So I want to look at the US30 on a longer time frame. The first thing I want to do is look at it on a weekly here. See what's happening. So what we can right away see, and we could see this right away from the US30. The US30 has been in a uptrend pretty roughly since right here, but it has come down a little bit sometimes. But it has basically been in a uptrend since November 21st on the weekly. So what we can see right here is this is the first time in a long time on the weekly where the L&L trend, the lines are crossing down in the opposite. So it's ending a long trend up. So what we can get out of this is most likely the direction of the US30 is going to start to come down. Now, what you want to pay attention to on the weekly, if you're looking at this on the weekly, you want to look at your wicks, and you want to make sure the wick that opens up is longer than the previous wick. If the wick is longer than the previous wick, then that means it's going to continue to come down. If the wick gets smaller, or even to this wick, it usually means it's found some sort of bottom and it will probably start bouncing up. So that's one thing you want to look for on the weekly and the longer time frames. So on the weekly here, it looks like the trend is going to start to come down. So that's what we can get from this. So from looking at this from before, though, all these bullish moments here, from this last time it crossed, you could have got in a lot of good times and banked a lot. So when the direction's up, you want to look at your RSI, and you could have got in right around here for a couple of weeks. You caught a big bullish moment right here. And there was a big moment right here. Using the RSI, you would have come in right here. Would have caught this one for weeks, and that would have resulted in about $6,000. And then there was a moment right here for a couple weeks, right about here. This one was tiny, this one. And then it starts to come down. So let's real quickly look at the day. Now, we know by looking at the weekly that it's starting to come down, and you could already see that happen on the daily. Now, on the daily, you see it already crossed down right here. So if you want to trade based off the daily, what you do is you miss the cross down, which has already happened, and it's almost going to start on the weekly, but on the daily it's already happened. So this was your point to get in. So what I would do in this scenario is I would look at all the moments when the RSI is crossing down. So basically you got that moment right here when it first initially crossed. Which is right here. Could have rode that. And then you could have rode that for 13 days and made about $2,618. And then the next moment would have been right here. Could have rode that out. And you could have made about $3,455 in that moment. So what I would look for here, if you want to trade this on the daily, is I would look at your RSI and look for the RSI to start coming down. That'd be the next entry point to do it on the daily. So keep your eye open for that. The next one we want to look for here, I'm going to go maybe the hour here. Now we know the trend is going down, so what I would do is I would focus on movements of it going down. So I would either wait for it to cross with the LNL, or I would wait for the RSI to start crossing down like you see right here. But I would like to actually get a confirmation with the LNL to see it go down. Smaller you go in time frames, the more trickier it gets. But this little move right here would have made you about $312. So with the market coming down, you want to focus on the moves of it going down. You want to go with the trend. So right here, could have rode that one out, and this one would have given you about $778. And that's about it. So you also have this moment right here. So when it crossed on the LNL, so you could have rode this entire thing down and go with the trend. And you could have rode it out from here to here, down here at the bottom. This is about 5 days. It's about $2,000. So that's the smallest time frame I personally do. I'm going to go down to the 15-minute just for those that want to do intraday here. So we know that the direction's going up, so the direction's going down, so I would focus on downtrends. But doing this on a 15-minute is kind of tricky, finding those moments. I personally would wait until for doing it on intraday levels, I wouldn't really pay attention to the RSI. I would just wait for the LNL to cross down, which you see that happen here. You could have rode that one out. And you could have rode that one out. But personally, especially dealing with the Dow Jones here, I like going to higher time frames. Even if you have to wait a while, I think it's worth the wait. The preferred time frame that I want to do here is probably the day, because it'll probably give you the best result. You will still have a lot of that volatility, but it gives you the best result. So from what I could see at the charts, based off the weekly, based off the daily, the market looks like it's going to start to come down. So my focus for next week for the Dow Jones is to go into sell positions, and that'd be my focus point. So if I were to be trading it, I'd be focusing on downward movement. For the Dow Jones, I don't like doing smaller time frames because it is very volatile. When I'll see the signal on a longer time frame, usually gives me the best results. But anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.